Hello, everyone. Welcome back to Swan Signal Live. It is Friday. Happy Friday. I'm joined here by my co-host, John Har. As usual, we've got Isaiah and Matt from the Swan Private squad. Thanks for joining us today, gentlemen. What's good? What's new? Thanks for covering for me last week. It was a good show. What's going on in your lives? Tell me something cool. Tell me something funny. What are you thinking about?
I'm just glad I haven't lost the co-host title. I was worried Brady was out 1 week. I had the reins. I thought he was going to strip me of it, but I haven't lost it. And there's something cool for me is I was at the New York Stock Exchange today. That's why I'm wearing the collared shirt. I had to throw on the old suit to chat with the folks over at FinTech TV. Do one of those 7-8 minute appearances. I haven't even watched it myself yet, but I'll watch it later, see if I said anything stupid. But that's
Dude,
what I
you
got.
always crush it. You always crush it on set.
Just big bullish price predictions every time, and I think you'll do great.
No, he's a voice of reason. That's why people like John. All right.
I appreciate that.
All right, so let's get started. We've got a bunch of news this week. I've got like 15 or 16 different slides to get through today. Plenty to talk about. Let's dive in. We usually start with market talk, so let's start there. Some news that came out, some numbers that came out this past week. Of course, we'll talk about CPI. We'll talk about the potential for and how it affected the potential for a rate cut on September 17th. But let's start here with average annual inflation. This is average annual inflation of 152 countries since 1971, when Bretton Woods collapsed. And actually, we had an anniversary this week, 54 years since Nixon removed the convertibility of gold into dollars into gold, actually. So since then, no country has averaged less than 2% inflation. Switzerland at 2.2% comes closest. 107 have averaged above 5%, 55 above 10%. And, let's just make this caveat as we usually do. Those numbers in reality are higher. The governments have an incentive, obviously, to sort of doctor these numbers so that they, aren't, exaggerated. So CPI, the basket of CPI goods changes over time, doesn't quite accurately reflect what consumers are experiencing in the market. So, John, let's hear your thoughts here on this chart.
Yeah, for sure. I posted this to LinkedIn or reposted it because it is a Deutsche Bank chart, which I think is something we should point out here. This is not like some Bitcoiner who's putting together these numbers. It's coming from a big Wall Street bank. I would love to know who wrote this report. I don't think we have it, but there used to be a guy named Jim Reed at Deutsche Bank. When I was still at Goldman, he would put out research that was like actually interesting and a little provocative. So I wonder if this is him. He might have left Deutsche Bank years ago. I don't know. I kind of lost track. But anyway, this is from a Wall Street bank. And yeah, I posted it to LinkedIn for all the normies out there, my former coworkers. And I said, this chart could also be retitled, Why Bitcoin is Valuable to Everyone on Planet Earth.
That's right.
That's literally what this is showing. And it's just shocking to me how maybe we'll show this, but Andy Constant, another TradFi guy, was on What Bitcoin Did with Danny Knowles and Lynn. Lynn and Andy were the two guests. And Andy actually said he still doesn't understand why anyone would exchange their cash for Bitcoin. Those are actually the words that came out of his mouth. He was also kind of confusing about it because then later in the show, he'd be like, oh, yeah, I get why people own Bitcoin. So I'm honestly not sure what he believes, but
so he actually believes stuffing cash under your mattress is better than buying Bitcoin.
Yeah. And then another point he goes, well, besides the appreciation. So, as if that's some minor reason to hold money. Anyway, yeah, that chart is just good because it's not like there is some successful fiat currency out there where it's been like, oh, you can hide out from inflation if you hold this one. The best one, I think it was the Swiss franc in the chart. That is still like over 2% per year. And again, as Brady, you correctly pointed out, this is the official numbers. Housing prices are not even included in this. This is a consumer basket of goods. So this is understating people's real cost of living, no doubt. So yeah, that's just like a very clear indication of why Bitcoin.
Absolutely.
Andy failed the first test, which is you don't debate Lynn. I mean, you're just going to get smoked. Like you just can't debate Lynn. And the second one is like that hedonic adjustment, which I love that word because it makes you sound smart, but like the adjustment of what the basket looks like for a lot of different inflation. It's like, hey, for beef, obviously beef's gone up a lot in value. I think people have talked about that or it's been posted around, but it can be like a ribeye steak back in the 80s. And now it's like, ground beef. Like those are not the same thing, but they'll say beef prices, right?
Yep.
Yeah. Housing obviously is one of the biggest expenses, but even with housing, like it's not including property taxes. It's not including insurance. And I don't know with you all, if you've looked at those things, those are all up like in the teens or in 20% on my side. And I don't live in New York City. I don't live in LA, in the Midwest. Like that's pretty wild to see that. And those are big expenses for people.
Isaiah, was it you or maybe Hurley a couple weeks ago made a joke about replacing like meat with like some sort of tofu turkey in the basket or something?
Yeah. It had to be Hurley, but that's good.
But yeah, that chart also reminds me, what's that site, you guys? It's like what the heck happened in 1971.com or something. Do you guys remember that?
WTF.
Yes, thank you, WTF. Very similar. And then lastly to John, you mentioned it's funny holding cash. Like, did you see the thing from Drake with his like safe full of like stacked cash? And everyone's like, come on, what are you doing? Bitcoin, man. Melting ice cube.
His financial advisor needs to get with the times. That's, makes for a good photo, but that's not a good financial decision.
There's nothing gangster about seeing your wealth just deteriorate over time.
Yeah. It doesn't look as cool though to have a cold card there. And then you can be like, hey, guess how many Bitcoin are on it. So
there you go. I brought this up before on the show. Most of you have probably been to this website, WTF Happened in 1971.com. It's a very simple website. A couple of friends of mine way back in the day now, probably 2017, 2018, put this together. And it's just a bunch of charts that show the social and economic effects of the fiat era. And it's fascinating. There's plenty here to explore, but you can see these inflection points. Here's a can of soup, for instance. Cumulative inflation charts. There's the CPI. Again, we talked about how that's underreported. Anyway, it just goes on and on. I highly recommend you checking out the site. It's also great to share with friends and family to kind of help explain the perils of fiat money. And that's really the first thing that people need to understand. As we know, every Bitcoin book starts out with what's wrong with fiat money. And that's a great website that just shows it in a very impactful way. So let's take a look. Speaking of the fiat era, 54 years ago to the day, I think earlier this week, I don't remember exactly which day it was.
It's today.
It's today.
August 15th.
Okay, it's today. Yeah. I thought it was like Wednesday. Awesome. 54 years to the day since this happened, Nixon took to the airwaves and talked to the American people.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what does this action, which is very technical, what does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you want to buy a foreign car or take a trip abroad, market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today. The effect of this action, in other words, will be to stabilize the dollar.
I mean, he was right that the dollar will be worth just as much today as it is tomorrow, but not 54 years from now, for sure. Since this speech by Nixon, the dollar is down, I think, about 89% in just 54 years. So certainly not the case that the dollar is worth just as much then as it is the collective tomorrow, I think is what he was trying to imply. So let's talk a minute about what he was trying to say here. And he talks about the speculators. The speech actually starts a little bit before that clip. And he was blaming the currency speculators on basically saying, like, I had to do this because of the currency speculators. And that is absolutely not true. That is just something he said to kind of cover. However, the speculators were indeed devaluing the dollar, right? But they were really just exposing some fundamental problems with the US dollar at that time. And that's what speculators can do. There were these, structural problems with the US dollar, and the speculators were exploiting that and exposing those problems. And he basically blamed them for taking this action, but it certainly was not the case.
So throughout the 60s, to your point, Brady, about like, this is because of the speculators. Throughout the 60s, this is not disputed, the French sent ships and airplanes to the US, to New York, to repatriate their gold. And looking up the numbers, most sources, to your point, Isaiah, earlier before we got on camera, about different LLMs having different answers, most of them seem to agree on the French taking something like 3,000 tons of gold out of the US. What they didn't agree on was what was the total number of gold mined at that point in time. I got everything from like 30,000, which would imply that the French were owned like 10% of the gold in the world at that time. That doesn't seem right. I got something like 100,000. And then for the estimate today, it's like 200,000. But anyway, if you assume that the French were taking like 3% of the world's gold supply, 3,000 tons out of New York vaults, because they didn't want this inflatable token that was on top of it, the dollars, they wanted the base money, the real thing. So that was the real, that, it wasn't just the French too, it was probably other countries as well. That was the real reason for going off the gold standard. And also hilarious in Nixon's comments is that he says temporarily. And, today, literally the 54-year anniversary of WTF happened in 1971 hasn't changed since then. And so temporary means 54 years, apparently, at least. And the other thing to keep in mind is it's not like the dollar just debased, but everyone's wages kept pace and home prices didn't get out of whack. The ratios here are critical. If you look at like income to or wages to home prices, wages to college education, wages to everything have just not kept pace. So it's not as if it was just like, oh, the dollar will be worth less, but everything you buy stays the same as a ratio. It's been literally the opposite. And that's what is demonstrated at that site, which every Bitcoiner knows WTF happened in 1971.
That's right.
The federal income tax is also temporary, guys, which is good. So as soon as World War I is officially over,
I mean, it's Milton Friedman, right, who said nothing is so permanent as a temporary government program.
Yep.
Yeah. And this is one instance or example of that.
I think one other comment that you'll get a lot of people from the traditional world that will push back on hey, the dollar's lost all this value. They'll make comments like, well, if you just invested in short-term treasuries or do this or that, like you really haven't lost that money. And that's basically cash-like. And I know John and I have gone back and forth on this or rebutted to people. That is investing those dollars though, right? Like that's what they fail to understand. It is, you shouldn't have to then take on, and they might say, hey, there's really no extra risk there, because you see the charts of the dollar and it like erodes away. And there's these fiat defenders. And I know it's John's favorite thing in the party trick. We talked about this on a Swan Signal a while ago. Like you must love Nixon, right? Like he must be your favorite president. And to me, that is a fun little game to play with people because, they get so twisted up in it. And at the end of the day, it's like, you want to be able to go create value, do your thing and save. And we've stripped that away and made it impossible and actually made it way, way, way harder. And for any of the things you want to buy, it's like the dollar has not been able to do that. And the dollar's been one of the better options. Like we've been very blessed and fortunate that, we all are here in the US versus some of the other countries we just showed, right? Over 10%. Like that is, you're wrecked after a decade. Like,
and many fiat currencies around the world that have just died, blown up, completely hyperinflated. We've seen asset price distortions. I think we talked about that, right? Stocks. I mean, a lot of this fiat money as it's being printed goes into these assets that are relatively scarce, right, relative to the dollar. And so you've got distortions in stocks and housing, et cetera, which also contributes to wealth inequality because those with the money start to accumulate assets like stocks and housing to protect their wealth. And most Americans, vast majority of Americans, don't have access or the ability to buy these assets, especially as they get more and more expensive due to fiat money printing. Over financialization of the U.S. economy, we stopped exporting, producing a bunch of stuff here and exporting to the world. A bunch of the production of the goods that we consume shifted over to countries like China and East Asia, Mexico, South America, et cetera, where it was cheaper, cost less to produce those goods. And our economy then grew based on financialization, all these services, financial services that don't really produce actual consumer goods, right? I think it's something like, I may be wrong here, but I think it's something like 30% of our GDP. I'll look it up here in a second, but a ton of our GDP comes from financial services. So we've kind of become the hub, a financial services hub of the world. And that's because we have the global reserve currency that can be printed over and over. So it's fascinating. These are just a few of the very major impacts on the average person from a fiat money regime.
You guys ever saw the French president at the time also was on TV basically calling out Nixon and the US, and he was pissed.
Yeah.
Rightly so.
That's why he sent the ships over to get the gold.
Yeah, exactly. And it's pretty, it's interesting to watch.
Which is a baller move, by the way.
100%. But yeah, that may have been like the first starting point, maybe of the French sort of just having this sort of, thing against Americans, and rightly so, right? Like they feel like they completely got ripped off there. They did.
That's right. That's the exorbitant privilege speech, I believe you're referring to, Matt.
Correct. Yeah.
That's right. That's right. Let's take a look at government spending in July, just as if you keep underscoring this. This is a great chart. Divvies up government spending on the right side, and receipts or income on the left side. So in July 2025, the U.S. government took in $338 billion and spent $630 billion. So almost twice as much on outlays as income. And this is just an example of fiat money tends to, or almost certainly over time, leads to exploding debt. And here we are just in 1 month, something about $300 billion in debt accrued.
Be honest, when you first saw this, did you think mempool?
It does look like that. Yeah.
I was watching normal television with ads, which is very rare. I don't know what, I'm trying to remember exactly what I was watching with my wife, but there was an ad for AARP talking about Social Security, and I interview all these seniors talking about how important it is. So it's one of the biggest line items there that we just had. And it talked about, we will not let Social Security be cut. There's these, rumors that it's going to run out of money. And they're like, it's not true. And then it's like, you've paid for it. And like all these different things about how they're going to fight any cuts to Social Security and that they're in your corner. And it's fascinating that, you can't come to the realization of there's not money there, right? Like that you cannot continue to have all these different programs, but there's zero appetite, as we saw with Doge. Then you see stuff like that to actually curb or curtail spending. So again, I know we keep giving shout outs to Lynn, but it's nothing is going to stop this train as far as continuation of this debt burden. And so, yes, it's 37 trillion today. It's 38 quick. It's 39 quicker. And it just continues to build. The snowball has been pushed. There's no way. Or those videos where people push the giant rocks down the mountain, like you're not stopping this thing. Like it's picking up steam and speed at this point.
I think government debt doubles, every 10 years. I think somebody posted that recently. I saw that.
It's probably accelerating too.
Mm-hmm.
And for anybody doing the mental math, if it is like a $300 billion monthly deficit, which I assume Geiger Capital got those stats right, because that chart looks like I believe that chart like comes from a government report. But 300 billion times 12 would be 3.6 trillion. I don't think we should be extrapolating that out, because I don't think the deficit is at 3.6 trillion annualized yet. I think it's closer to 2. So there must be something unique about July in terms of like, it must be a light revenue month for tax payments or collections or something, plus maybe it was a heavier than usual spending month. But so I just wanted to highlight that. Either way, obviously, 2 trillion annual deficit is still massive, especially in light of the fact that 6-7 months ago, people were claiming that that was going to get cut. But yeah, there's just some nuances about July. So I just wanted to note that.
Yeah, tariff revenue must have been down. So,
So I did look it up. In the 1970s, the broader financialized economy, which includes finance, insurance, real estate, rental and leasing activities, was about 12%. Right now, it's at about 22%. So it's almost doubled. 22% of the U.S. economy related to financial activities. Okay, I've got to actually a little pause here. Actually, it's a good time to pause. We're going to move on to a different topic anyway, but we have a good question from the chat. So this will be a good one to riff on as a side quest. Here we go. What would you consider to be Bitcoin's greatest threat that it is yet to face? And this is a great question. It sort of forces you to think critically about Bitcoin. I can go first and give you guys some time to think about it, but I think regulatory choke points which is I would consider probably before this past U.S. election last year was much greater. I think it's been diminished a lot. So I'm not sure that it's the greatest threat anymore, but it definitely still exists. There could be, a reactionary administration that comes in after Trump's term that sort of undoes a bunch of things that Trump has done, because his administration has been very friendly to Bitcoin and crypto. I'm not happy about the friendly to crypto part, of course, but you could see sort of a reactionary administration come in and really make it a priority and demonize, during the election, Bitcoin and crypto and try to take it out. I could see that happening. I think that's probably the answer I would take. I don't think there's a bunch of technical risk at this point, but that certainly could happen. We've been through a lot of stress on technical debates about how Bitcoin should be built. And especially in 2017 with what was called the block size war, which was a debate about how big the block that's found about every 10 minutes by the miners should be. Right now, it has a 1 megabyte limit. There's something called SegWit that sort of expands on that, so it's a little bit higher technically. There were big blockers which forked the Bitcoin blockchain and built something called Bitcoin Cash, which was pro bigger blocks, and they created blocks that expanded from 2 to 4 to 8 to 16 at 32 megabytes. And so that happened. We got through that. We made a choice. The markets, said, okay, this is the Bitcoin. We're going. Bcash went, I don't know, it's effectively to zero against Bitcoin, and so that choice was made. It makes me think that if there's further technical debates about how the protocol should be further developed, that we will be able to withstand them. But it was kind of a dicey situation for a little while. And the other one is, I'll actually pass it over to you guys. If you guys have any other ideas that may be the same answer you might give, and that's fine.
Jim in the chat, he brought up quantum. That often comes up. I'm not sure if you guys saw that Graham Cook, I think his name was. He's an ex-Google engineer who recently posted about this. Did you guys check out that thread at all?
I have it saved. I started it and said I'll come back to it.
Yeah, I pinged it in the private chat there, Brady, but basically kind of does a deep dive in there with, I think, TLDR being, we're so far away from this actually being a threat to Bitcoin. And, this is already being worked on to prevent it. So that would have been my number one, or one of the top ones. I think, yeah, like you touched on the social layer, Brady, too, and consensus. The node runner is going to get into, running one version of Bitcoin versus another. And then centralized mining, I think, is my last one that's kind of on my mind.
Yep.
Quit stealing all the other answers, Matt. Jeez.
What? I'm sorry, guys. I didn't go very deep with any one of them, so feel free to.
Ex-Google engineer Graham Cook explains the math behind Bitcoin encryption and why hodlers shouldn't fear quantum computing. I'll throw this into the chat. You guys can take a look at it.
John, what would your answer be?
So I would give a few when I think of like things that would really be a threat to Bitcoin. One is kind of is more theoretical, is like if we got a sound money president, and not just a president, like Congress, politicians across the country, and they were like, we're going to fix the fiat money supply. Ironically, that would harm Bitcoin. Even so, there would still be value to Bitcoin, because why should you believe the politicians that just happen to be there? Plus, there's like a censorship resistance element to Bitcoin. But dollar debasement is a huge part of the Bitcoin thesis. So just in theory, if they stop debasing the dollar, Bitcoin would not go up as much. So that's one thing. I put that at a near 0% chance of happening. I think you have to throw quantum on the list. I'm not going to pretend I understand it. I'm a finance major. I think there's, even within the tech world, I think there's very few people who truly understand where quantum is at today and where it's headed, what it'll be used for, and exactly how resistant Bitcoin is and what can be done to solve that. If anyone wants to do a deep dive, I would recommend Chain Code, which has some of the best Bitcoin developers out there. They did a piece, I think it was this year, a few months ago, on quantum. And it specifically was like, where's quantum today? How is Bitcoin resistant to it? What paths can we take in the future? So it's a really, really good report. And then one other one I'll throw out there, I think a custodian failure. Let's just say, hypothetically, one of the big custodians out there has an issue and they literally lose like 1 million Bitcoin or something. That would not, as everyone knows, that would not affect the Bitcoin that we hold in our own mobile wallet, hardware wallet, whatever. But you have to admit that a huge part of the Bitcoin narrative right now is institutional adoption of Bitcoin, and they are using third-party custodians. So just imagine if one of those third-party custodians failed in some way. That would really, really harm the adoption narrative, because these institutions would be like, oh, I just can't trust this asset as much. Again, that wouldn't kill you. We could all use our Bitcoin the very next day, the same day, right? It wouldn't stop us. But I think you have to put that there, because it would just change how the asset is viewed globally. And then the last one would be like, if there's a solar flare and all the electronic devices on the planet go out, you have to put that on the list. But at that point, your bank account doesn't exist. Your brokerage account doesn't exist. Who cares about what stocks you own? And your Bitcoin doesn't matter. And at that point, you probably just want guns and cattle. So that's kind of the list for me.
One more thing there, John, too. If anybody hasn't caught it, there was a quantum symposium put on in San Francisco by the Bitcoin Presidio. And they had a pretty good playlist they released about some really smart people in the Bitcoin space working on this. So yeah, it's a Bitcoin Presidio quantum symposium.
I want to expand on mining centralization for just a minute. And yes, we're big Bitcoin believers, but you gotta, this is what I love about Bitcoiners, is Bitcoiners are willing to think critically about this thing that they have a lot of hope in for the future of humanity. But that is exactly why we have a lot of hope for it in the future of humanity, is because Bitcoiners think very critically about this system and think a lot about how it might fail. So on mining centralization, there's a couple of things. One is, the big concern is about basically a government, or a government most likely being able to censor Bitcoin transactions at the mining level, because the big mining pools, it's a collection of a bunch of miners, and the big pools will be able to basically take all that hash rate, or they are able to. That's what they do now. They take all this hash rate, and when they find a block, they are the ones who get to construct the block, meaning they choose which transactions are included on the blockchain from the mempool, which is where the transactions wait until they're included to the blockchain. And they get to decide which transactions go. And if there's, one or two or three large mining pools that the government can coerce, the fear is that they'd be able to censor Bitcoin transactions, which obviously is, against one of the great benefits of Bitcoin. So there's a couple of things happening there. One is called Stratum V2, which is a project to allow the individual miners. So let's say there's a mining operation that's capping flared gas in Texas, and they're connected to a pool, right? And they discover a block. Their actual miners discover a block. With Stratum V2, the owner of those rigs would be able to construct the block. So there's no centralized block construction happening. It's actually the individual mining operations that get to construct the block, which would, go a long way to solving this problem. Another one is the ability, like Jack Dorsey and his team announced this week, this amazing evolution of Bitcoin mining hardware, the actual chips themselves. And they're open sourcing that hardware structure so that other companies can produce chips of the same structure. And they're actually better than China's Bitmain chips right now. And so that would go a long way as well. The cool thing is Bitcoiners are thinking about these problems and actively finding ways. It's a global community that are putting a lot of brain power into how to prevent these problems from happening. So anyway, I think that was a good review. Hopefully that is a satisfactory answer for you.
Well said on that, Brady, on the mining too. Bob Burnett, what's up, Bob? Your son-in-law is an awesome dude. He's a client of mine. Bob Burnett from Barefoot Mining has talked a lot about this too. And if we got to a point where only the non-large sort of U.S. public company miners, right? If that's the vast majority of those collecting those transactions, and there's maybe a small 5% of just local small-time miners doing this, who's going to put forth the transactions of those, in a future dystopian world where the government says, hey, Isaiah is actually a terrorist now, because he didn't go through X, Y, or Z to do something. So who's going to put forth his transactions? So it's super important to keep this open, just as the web needs to be open. Yeah,
great question. Great conversation there. All right, let's jump back into, we've got another point here on finance stuff and market stuff. There is a Fed meeting on September 17th, and there's, as always, the market trying to predict what will happen in that meeting in terms of rate changes, interest rate changes. This is one here, and John, I can't wait to hear your answer because I know that you're always watching this, but Jamie Dimon, this is one I picked just because I thought it was kind of an outlier, especially coming from someone like Jamie Dimon, who is entrenched in the financial system. Says that he expects a 1/4 point cut next month, followed by 3 more cuts of the same size, which would bring the benchmark rate down to 3.25 to 3.5%. I think I saw one survey of economists said that about 61% of them believe that there will be a rate cut next week. How have things changed with news this week, John? And what do you think personally? Where do you put the chances of a rate cut next month?
Yeah, so the market, based on the CME tool, which is based on futures positioning and kind of implied what the market thinks is going to happen, they still say 85% chance of a rate cut from the current range, which is 4.25 to 4.5. They think it's going to get cut to 4 to 4.25. That I think that was higher before the inflation data that came on Wednesday, or Tuesday actually. The core CPI is now above 3%, and just the regular CPI is 2.7. It's ticked up. The last time it was that high was February. So yeah, technically it's rising inflation. It is by a little bit. TradFi people love to read into these numbers and say, oh my gosh, it's 2.7 instead of 2.6. I always kind of laugh at that because I think it's, applying a level of false precision that doesn't really exist. But you can't just ignore it because the powers that be, politicians, central bankers, they do look at this stuff. So far, it doesn't seem like that inflation print was hot enough to throw off the course of some rate cuts coming either in September or later this year, or both. And I do agree with you. It's interesting that someone like Dimon says that comment, puts it out in public. You have to wonder if that's kind of what he wants or thinks should happen. And then someone with his, reputation says it, and then maybe he thinks it's going to influence the Fed a little bit. I'm speculating there, but I would just go with what the market is saying now. I do think we'll get a 1/4 point cut in September, but tough to predict the central bankers.
Polymarket is saying that the 2 rate cuts between now and the end of the year is the most likely, within 3, and then 1, and then 0 being the lowest from that standpoint. So, there's degenerates that will bet on these things, but sometimes there's some money associated with that. Maybe Jamie Dimon has some bets out there. He's trying to move the market, and
yeah, I mean, he does have an incentive, right? To
big
like
incentive,
this.
right?
You
Maybe
know,
Jay
he's
Powell texted
serving
him.
investors, right? So
Yeah, I mean, there are things. I think you start to clue in, even going back to the Nixon conversation earlier with the temporary suspension, like politicians and leaders of these different things, they'll have these internal conversations, and they'll use other people to float ideas to gauge market sentiment and then actually see how things go. And so it wouldn't be surprising if, Dimon is, being encouraged by others that aren't wanting to say it publicly to float this out there, see how things are received, and then go from there. But it'll be interesting. And another fun fact, because I had someone ask me this, how many rate cuts have there been with Bitcoin being around? And there's not been as many as I would have thought. And so it's looks like there's been 4 total, or sorry, 8 total.
Like rate cutting cycles, you'd say?
Correct. Different times that the FOMC has cut rates. And that's me using a lot of different tools to pull that information, and still in the process, double checking. But yeah, I'm coming up with 8 at the moment.
I had a question.
What was that, Brady?
Since when?
Since the inception of Bitcoin.
Okay, got it. Thanks.
I was going to say, yeah, John, I mean, do you think there's a possible world next year, let's say Jay Powell's out, and, do you think it's ever going to be possible to have like a, 200 basis point cut? Or is it just like going to be small little cuts from here? I mean, what would that world look like to bring that on? Is there precedent for that?
I think you see those types of cuts when there's something super wrong happening. I mean, the 2 times that, and I would have to look it up to see if they really did cut by that much at once. I think during COVID or the GFC would be the 2 in my lifetime. And again, I'm not even sure if they did that much. They might have even done those somewhat gradually, but I don't know. I would assume that had happened, because when they cut it down to 0, it probably was above that before. But I would need to fact check it. But either way, I think it's like super rare, once in a generation type events that happen, whether it's, pandemic or global financial crisis. Even like the March 2023 banking crisis, that if they had cut rates, that would have been a solve to that one, because the reason that crisis was happening is because rates rose and the treasuries that these banks owned were underwater by so much. But inflation was still very high. So they couldn't credibly say, we're cutting interest rates down to 0. So you always have to remember what they're trying to balance. So yeah, I think it's like it takes a real big crisis to cause rates to be cut by like multiple percentage points at once. And even then, the Fed's hands might be tied, and they might come up with something else, like the Bank Term Funding Program, which they came up with on a Sunday, emergency made up new program. And that allowed them to effectively pretend like rate cuts didn't happen for the banks specifically. So that allows them to like fix the problem without cutting rates by multiple percent. So you just have to remember they have like a lot of different, I hesitate to call them tools in the toolkit. That makes it sound too legitimate. They have a lot of ways to paper over problems.
Got it. Yeah, that makes a lot more sense. I was thinking, man, like, whenever they started raising it super fast, wasn't it over like a 9-month period? And we just like,
yeah,
I've super high rates.
So chat says there's never been a 200 basis point cut in a single meeting. The biggest was 75 basis points in a single meeting, and that was early 2008. They ended up cutting by 175 within 2 months. And then in March 2020, as a reaction to COVID, they cut by 150 basis points in 12 days. I mean, they must have made some emergency meetings.
Yeah. So March 3rd was a 50 basis point, and then the 15th was 100.
Yep. There you go.
Got it. Yeah. So there's no possible world where Trump goes, hey, economy is kind of humming along, like things are looking good. Time to throw some gasoline on this and really make it, I don't know.
I mean,
he can't, he doesn't make those decisions. All he can do is, try to make fun of Jerome Powell on Twitter or something.
Yeah, officially he doesn't, but yeah, they are
Officially.
very distinct, separate entities that have no relationship with each other. So independence is important.
Was that sarcasm? I can't tell.
I don't know.
All right. Well, speaking of, let's flip over to the Treasury side of things. Bessent had a couple of things to say this week about Bitcoin. He posted this to Twitter. I still call it Twitter. I think I'll always call it Twitter. So it said Bitcoin that has been finally forfeited to the federal government will be the foundation of the strategic Bitcoin reserve that President Trump established in March. In addition, the Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin to expand the reserve and to execute on the president's promise to make the U.S. the Bitcoin superpower of the world. That's how I hear it in my head whenever I read it. So this is, this is what we've heard since January, really. And then of course in March when the executive order was made, the language has been the same: budget neutral pathways to acquire more Bitcoin, and they're exploring that, right? And they're still exploring that. Back in March, they had a 90-day window where Trump said, "Come back to me in 90 days and give me a list of budget neutral ways that we can acquire more Bitcoin." That obviously hasn't happened. They're still just making the same assertion. Interestingly, Bessent then seemingly flip-flopped on this episode.
You're talking about
Fox Business,
a number way above 750 billion. What's the story on gold?
Look, we've got the large gold holding. I doubt we're going to revalue it, but we are going to keep it there, again, as a store of value for the American people. We've also started to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
So he said
confiscated assets and continue to build that up. We're going to stop selling that. I believe that. So
he said, right, that we're not going to buy anymore. He said we're going to stop selling. And this was the same week that he wrote the tweet where he repeated the exploring budget neutral ways to acquire more Bitcoin.
So the Fox News clip came first.
Oh, the Fox News clip came first. Thank you. So he
actually himself. He went back on it in the positive way from the Bitcoiner lens.
Okay.
Which then makes you speculate a whole bunch of like, is he just not up to speed on it? Does he not personally like Bitcoin? And then what happened after when he went on national TV with Maria Bartiromo and says, "We're not buying that"? Did somebody tap him on the shoulder and say, "Hey, Scott, get with the program here. Have you not been following David Sachs and Bo Hines?" And then he sends out this tweet. And for like a few hours, people were up in arms on Twitter saying, "Look, this is proof they're never buying it." And then he sends out the tweet to fall in line with what Sachs and Hines have been saying. But to be fair, they've just been saying that for a while. We're still waiting for the follow through.
Interesting. Okay. That makes me think that there's been some kind of conversation in the background that they've decided not to acquire more Bitcoin. And but the instruction was publicly to continue to toe the party line. He may have just forgotten what the public line was versus the behind the scenes line.
I also love in the tweet "finally forfeited." I will go on record and say I will never finally forfeit my Bitcoin to the government, so they can't take it
out of your cold dead hands.
Yeah, right. Like as long as you don't finally forfeit it, they can't take it. Right? That's weird. It's just a weird way he phrased that. But
I think it's probably a legal
totally
term.
It's like, hey, if we think that this person's a criminal, although Matt did call me a terrorist earlier, so I might be in trouble here. That they can go through legal proceedings and then finally forfeit it once it is legally approved that they can seize the assets.
And that's super important too, because Jones in the chat, he's asking, I thought, hey, that's the point of Bitcoin, is it can't be just stolen from you from the government. That's correct. But you'd be surprised what people offer up in terms of their private cryptographic keys when a gun's pointed at their head.
Yeah, Jones, yes, the government can't get their hands on your Bitcoin. That is the whole point.
They get their hands on you.
However, they can seize Bitcoin in criminal cases where Bitcoin is being stored at centralized locations. So not your keys, not your coins. That's where that Bitcoin message and rule comes into play. All right.
Also, a quick shout out to Tom on the 10 rate cuts. I might have been wrong on 8. So AI got some work to do.
Yep. Thanks, Tom. Appreciate that. All right. Let's talk about Bitcoin treasury companies for a little bit. Let's see. Let's start out here. John, you posted this earlier this week. I'll let you explain it.
Sure. This is anniversary week. Not only is today the 54-year anniversary of the Nixon Shock closing the gold window, Monday, August 11th, was the date in 2020 when Saylor and Strategy first announced that they were buying Bitcoin. If my memory is correct, I believe there might have been a regulatory filing before that in July or like end of Q2 2020 where they said, like, we're changing our policies to be able to buy Bitcoin. I believe, fact check me on that. But so I think it was in the public sphere that they were going to do it before August 11th. But August 11th was the day that they announced purchases. That's my recollection. So this chart shows performance of all the major asset classes here. Obviously MSTR and Bitcoin are in it, but so is QQQ. That's the tech stocks. SPY is the S&P 500. GLD gold. It has VXUS is non-US stocks. Interesting one here is BIGPX. That's the 60-40 portfolio. It's up a total of 14% since 2020. I mean, like, just think what house prices are up in your neighborhood, probably at least 50% in the last 5 years. Most places way, way more. Imagine if you have your life savings in the 60-40 portfolio and you're up 14% nominally in 5 years. That's just a brutal wealth erosion. And I have some other slices of bonds and commodities and emerging market stocks, yada, yada, yada. And does not take a PhD in statistics to see that one is outperforming the other here. And Bitcoin is up 900% in the course of 5 years. MSTR is up 2,700%.
Dang.
Which is really just really incredible outperformance. But this is the benchmark, right? This is from day one of them buying Bitcoin. So here's the scorecard.
The 60-40 portfolio is dead. So go to swan.com/IRA and there's a nice little calculator on the impact on your portfolio your retirement portfolio by adding Bitcoin. You can get a Bitcoin IRA over at Swan. So you
Can I just say one other? Oh, sorry, Brady, go ahead.
Yeah, no, I'm just saying you should do it. Check out the numbers, and you're just leaving a whole lot of money on the table for your retirement. A 14% increase for a 60-40 portfolio. That calculator will show you just how much that portfolio would change with a 1%, 2%. You can slider and then change everything. 3-5% allocation. It's drastic. All right,
for sure. I just wanted to make one other point. There's this guy, Chris Bloomstrand is his last name. And he blocked me on Twitter back in 2022 because he was posting stuff. He was trying to get the SEC to clamp down on retail people investing in Bitcoin. And his thesis was like, look, they're down 30, 50%. Like, this is heartbreaking. He's playing like the emotional angle. Like, look, these people are just losing money. And I was like, that's a complete joke, right? Like, there's stocks that go down 50% in a few months. Like, what, you're going to not let anybody buy those stocks? What is actually true and is affecting way more people. Think about how many millions of American households who own assets own the 60-40 portfolio.
Yeah.
Like, they're the ones who are losing out. Obviously, Bitcoin he made the comment in 2022, at least he had the argument that Bitcoin was down. But like, now look at it post-COVID, owning the 60-40 portfolio, you've literally just watched your wealth erode. And he's a TradFi, like, financial advisor, RIA type guy. And I just have to call that out because it's like, he's just been proven directly wrong over a 5-year period now.
That's
yeah.
right.
And I've had people say, hey, you just need to be a patient bond investor and that this too will change. And which is, again, laughable. It's ridiculous. And lots of money trapped in the bond market, which, going back to Bitcoin equities, right? These leveraged Bitcoin equities or Bitcoin treasury companies. What are one of the things that they're tapping into is saying, hey, bond market, all the money is dying there. How about you port yourself over, own some debt of these Bitcoin related equity companies, and there's some better possible returns for you. If you don't want to own the exposure in something that is maybe as volatile as Bitcoin, maybe you can do this and it will still be beneficial. And I think that's what MicroStrategy's really done, but there's going to be other players doing the same playbook. And I think that's really, really interesting because there's a ton of money that's locked in there. Same thing. It's not just 60-40, it's 401k plans. And I've talked about this with the qualified default investment alternatives, or QDIAs. It basically defaults into like a target date portfolio. So if you're older, you're going to have like 60, 70% in bonds because you're just a hardworking person that goes in and says, yeah, I don't know anything about investments. I'm just going to click whatever it tells me. And that's what it tells me. And all of a sudden you wake up and you're like, I've been putting money in here and it's like flat for the last 5 years before you retire. That's depressing.
I remember even like at Google, they'd have some like Vanguard accounts for retirement. And for young people in their 20s, they were still like recommending like 80-20. It's like, what are you talking about? It's ridiculous.
Yeah, absolutely ridiculous. Get yourself some Bitcoin in your IRA for sure, as fast as you can. All right, let's see. What do we got here? The next one. Okay. So here's an update on the Bitcoin treasury companies. Total Pubco Bitcoin holdings now at 951,000. Strategy at 628. The top 5 hold 772. The top 10, 841. There's a ton of room for new pubcos to start their treasury. Swan has been working with Sequans, a French company, to execute their Bitcoin treasury strategy. It's very early days for that. Just started a few weeks ago. They now hold over 3,000 Bitcoin, which is an awesome start. They're in the top 25 or so companies in the world in terms of the size of their Bitcoin treasury. So you can check that out. That's SQNS. I mean, anybody got a comment here? This is a lot of Bitcoin, and it seems to only be growing, and it's getting faster and faster.
Yeah, I think this is a quick hit, but I like that Ben put the stats out there. There's a lot of calls for people saying, "Oh my gosh, this Bitcoin treasury thing, it's a mania, it's a bubble," whatever they're saying about it. Like, you just look at the actual purchases that have been made and the Bitcoin that is held. It's so concentrated in the top handful or dozen names. I just don't see us being at the mania stage of the Bitcoin treasury trend yet whatsoever. Like, we might get there eventually, just not there yet.
Recently, Strategy launched their 4th preferred equity offering called Stretch. And it was their largest IPO to date by far, really. It's, well, John, I'll let you explain it. I think I'm getting a more decent understanding of what's going on here, and it's a very interesting product.
Yeah, so this is this is STRC, known as Stretch. It is a preferred stock, but it has a variable coupon, so it changes every month. And this is some people have referred to it as cash-like. I guess the more appropriate way would be to say it's money market-like. The rate on your money market fund is actually being reset every month. So that's what's happening here. The graphic here, which is a little hard to describe verbally, but basically it's showing the logic of how MicroStrategy is going to adjust this coupon on STRC
in order to keep the price around $100.
Yeah, exactly right. Exactly right. So some people have called it like a stable coin with like Bitcoin backing issued by MicroStrategy. That I get where they're coming from with that. That might confuse people because a stable coin, as we know it, is just something like inherently very different. But there is like a stability aspect to this. As you said, Brady, they're trying to keep that price close to par or 100. So bigger picture, this is a new instrument for MicroStrategy. As we've said many, many times on this show, they're going after big pools of capital out there in the world and giving them adjusted and securitized Bitcoin exposure of different types. But in order to attract those pools of capital, you need to give it to them in a way, you need to give them an investment that kind of meets the characteristics of what they typically invest in. So This is their latest foray.
So the money market account seems to be kind of the best comparison. This is a short duration. You could put some money in there for a few months. You're getting what, 9%? right?
Around 9%.
Annualized. So it's obviously, I mean, I think it's about twice as much as you're going to get from a money market account, which is, set about the Fed fund rates. So it's a pretty interesting offer, and I would use it. It is an equity, and one question I had before I'd really thought about it was, aren't you going to have capital gains tax when you sell this thing? Why would you do that? That's why it's kept around $100, so that when you do sell, that doesn't happen, or it's minimal.
Yep.
Okay. Let's see. Let's do some quick hits. We got a little time left here. I love this one from our friend Anil. It's like 99 Bitcoins created the image, but this is Bitcoin obituaries in the media. It looks like we peaked in 2017. That was the massive blow off top toward the end of the year there, that speculative mania. And 124 articles in 2017 proclaimed the death of Bitcoin. And now we're just down to 2 so far, or 2 in 2024. It doesn't go to 2025. 2 in 2024. So we've got this nice big spike, and then it's just this totally crashed like an altcoin. All right, so that's kind of self-explanatory. Let's see what else we have here. Google Play, the Google Play Store came out with a new rule that you basically you cannot create an app on the Google Play Store that allows non-custodial Bitcoin holding, and apparently it was overturned or is like retracted soon after this was posted.
The intern got fired, I think.
Yeah. It got moved up to the top, and they're like, nah, yeah, we didn't. What are you doing making these decisions? And they overturned it.
You do have to wonder if it was like a trial balloon, as they call it. They put something out there, they get to see the public response to it.
Yeah.
It was within a few hours, and shout out to Blue Wallet, because they tweeted at Google Play.
Yeah.
And they were like, why would this be the case if our wallet is self-custody, non-custodial is also the term, or unhosted, which I hate that one. That's the one that the governments use. If a wallet is any of those things, there's no law that says you must have a FinCEN license or MTL license or be subject to the Bank Secrecy Act. There's no law that says that.
Yeah.
So Google was initially taking the stance that these wallets still have to have one of these licenses. And Blue Wallet reaches out and is just like, there's no law that says this. Google responds and says, thanks for flagging this. Non-custodial wallets are not in scope of Google Play's cryptocurrency exchanges and software wallets policy. We are updating the help center to make this clear. So good news that it gets walked back, but it still is a little weird that, like, how do you not catch? You don't have enough people working at Google to catch something like that. So I'm a little skeptical of what actually happened there.
Yeah,
they're too busy. They're getting massages. They're going on walks. I don't know.
You would know, Matt.
I would say Matt left, and they're just doing all kinds of
riddance.
We've got Bo Hines. What didn't spend too long. The AI. What is he? What's his name here? I don't know. What was his title? But he didn't spend too long in this position. He's leaving. We don't know what he's doing next. There it is. Bo Hines. Where does he go? Maybe he's going to Nakamoto. I don't know. Let's see. Circle building a new layer 1 blockchain. Interesting development here. Combining database backends, centralized SQL database backends with virtual machine front ends, and swapping out to Bitcoin as the settlement layer. We'll see how that goes. It could be a way for companies to kind of meld centralization and the efficiency you get from that, and decentralization settling to Bitcoin. Let's see. This one's funny. The UK said how to save water at home. One of the suggestions here is to delete old emails and pictures, as data centers require vast amounts of water to cool their systems. Come on now. Come on. I mean, first of all, why'd you include email there? Like, email doesn't take up any space, any data. Pictures might, but this is hilarious. People aren't going to delete their photos. And look, it's just, you gotta figure it out, guys. You gotta figure it out.
I'd rather install a rain butt, Brady, obviously.
Yeah, what is a rain butt anyway? I needed to ask Nathan about that. Install a rain butt to collect rainwater. I mean, I don't know. I got some visualization going on in my head, but I don't want to think about it any further. So let's talk about James Chanos. He's been out there taking on MicroStrategy and Saylor on Twitter. What prevents another acceptable hard limit coin creation protocol, given the now substantial economic incentive, Bitcoin over 2 trillion, to do so? This is a human construct, after all. When all is said and done, there's no law of physics that states Bitcoin has to be the only one. All right, it may not be a law of physics, but it's called network effects, and it is a law. It is a law that we have, understood and experienced over time as we've started building communication networks. There's a protocol that becomes the winner. It becomes the dominant protocol for that communication service, just like TCP/IP, which was invented decades ago and will never be replaced because the entire internet is built on it. And why is the entire internet built on it? Because everyone wants to be on the protocol where everyone else is. Same thing with phone networks, etc. It's a simple answer. James, I don't know, man. You got to figure this stuff out. This is pretty easy to understand, in my opinion.
I'm excited for Chanos coin. Let's see it.
It's going to be a hard limit. Chanos coin. It's going to have 21 million hard limits, and everyone's going to move over to it. All right. Great show, guys. That was a lot of fun. Always fun to hang out with you guys on Friday. We will be back again next Friday. Of course, I will let you guys say goodbye and any final words, and then I'll take us out.
I can say, sorry, John, you go.
No. Go ahead, Matt, please.
Just a quick PSA for everyone out there. Bitcoin adoption is increasing. The price will go up from here over time. We're going to see more attacks, more social engineering attacks for everybody, right? People are going to call you up, claiming they're from somewhere else, trying to steal your Bitcoin. No one will ever call you from Google. No one will ever call you from Coinbase or X or anywhere else saying, hey, this is an emergency. We need to help you with your Bitcoin within 30 minutes or less. Yeah. Or it'll go bye-bye. Give us your seed phrase. Like, do not hang up the phone. Do not interact with them.
You need to call.
Trying to fool you.
You need to call the company to see, so that it's official company phone number on the company's website.
They will spoof emails too.
Yeah.
Yes, as I said, they also spoof emails, so it looks like they're coming from an official thing. If you have any question, just reach out to us here at Swan. Just call us. You have our cell phone numbers. Hey, Matt, is this real or not? Is this coming from you guys? Yes, we can talk about it. I can verify or not, but just be aware, man. We're going to see more of this stuff. So just always assume someone's trying to steal your Bitcoin.
All right, John.
I think that was a really good PSA. I don't have anything, and that's from an ex-Google employee right there, Matt.
There you go.
So you heard it from him. I don't have anything as important. I would just underscore, I do think it is a pretty cool week that going forward this time in August, 4 days apart, August 11th and August 15th, is always going to be this time of year. We can always point to, this is when Saylor started buying Bitcoin, and this is when we entered the fully fiat era. So two just monumental things in monetary history.
And they're always going to be linked every year.
Yep.
All right, Isaiah, someone in the chat says you look like Jack Dorsey and you're not fooling anyone.
I wasn't sure what the comment was. I was like, I don't know what they're getting at. So I was a little confused. I guess I'll take it. I'll wear a Satoshi shirt next time.
Yeah, exactly.
The hint. What I would say is for anyone that, and I saw a tweet about this, but I talk about it too. Like, there's no top signals right now flashing red for Bitcoin. Bitcoin's still relatively very inexpensive. It's time to stack, and we're going so much higher. And it's easy to say that because we're all bullish Bitcoin, but there's just not the bubble-ishest kind of this FOMO peak yet. We're not there. We may get there, as to John's point on even the Bitcoin treasury companies, but we're nowhere near that. And so it's some really exciting time out in front of Bitcoin. And that's kind of what I would tell people is just continue to stack and do your thing and save into Bitcoin and you'll do great.
Awesome. All right. Thanks, gents.
All right. I do have one more thing, Brady.
Okay, go for it.
I got blocked by Clifford Asness just now for a totally polite response to his comment.
Yeah.
And I just said, why does it have to be binary? Bitcoin will take over the dollar or else what? And then I shared a screenshot of like an explanation where I was like, hey, look, the last 10 years, Bitcoin did not hyperinflate. The dollar still exists. Treasury still exists, and Bitcoin does well. And his response is just blocking me.
Can't handle it. Can't handle the truth.
He's soft.
All right. Thanks, everyone. Everyone check out Swan Private. These guys all work at Swan Private. They build strong relationships with their clients, really, truly strong relationships. A lot of these clients just become friends of these guys because they are so good at their job and they're so available, and they just take the time to really help people understand what's going on with Bitcoin. There's John with his, unbuttoned shirt, just like he's wearing today. We've got a comprehensive platform, ironclad security, do research. We have events. We have a great time with our private clients at events. Also check out a Bitcoin IRA. Like we talked about earlier today, it's more than a plan. It's a partnership. Again, we really take pride in working directly with our clients and establishing a partnership with them. Here is that calculator I was telling you about. So go and check that out and play around with the numbers and get away from that 60-40 portfolio. Also check out Swan Vault. There's Lynn Alden and Adam Back talking about Swan Vault. You can watch this video if you go to swan.com/vault. This is our multi-sig solution so that you can hold your own keys. It's self-custody, but you don't have to go it alone. The Swan team is there to support you, and it's a fantastic product. We're proud to be able to take people into the world of self-custody. That's what we really promote here at Swan, not your keys, not your coins. And also check out BTC in DC, happening September 30th, October 1st, coming up really fast. This is at the historic Kennedy Center in Washington, DC. The speaker list is absolutely off the charts. We got Saylor, Natalie Brunell, Jack Mallers, Jeff Booth, Adam Back, Senator Cynthia Lummis, Tur de Meester, Corey Clipston, Samson Mao, goes on and on. Check out btcindc.com. Grab your tickets. We will be there and hope to see you. All right, next Friday, everybody. Take care.